Welcome back to Morning Trade Live. We got 90 seconds till the bell. We are looking pretty decent. Joining me, Kevin Green, with the setup as we've got S&Ps right now and futures 55.73 kg. What are your standards for today?
Just being able to hold the markets where they are right now. Look, I think Nvidia is a telltale sign where we are seeing maybe a little bit of risk on right now. Let's see if it's going to be able to hold. It did hit that 118 level earlier this morning, but we have seen these type of markets, Oliver, where we open up strong and then we fade throughout the day. And so that's not what we really want to see going into today's session. And hopefully we get some good data when it comes to University of Michigan consumer sentiment data. I think that's the biggest risk for the market right now. It might already be priced in as far as maybe a little bit of a negative print right now. So anything that's better than the street's expectations could be bullish for this market. And hopefully we can kind of reclaim some of these levels that we've been talking about.
Great point on Nvidia. I want to come back to the sentiment and inflation numbers in just a moment. But for Nvidia, I think that's really good eyes and a reminder. I was talking about that yesterday because it seemed kind of crazy to be optimistic on the fact Nvidia was like up 0.5% towards the close yesterday. But it was really fighting yesterday to hang in there. And so this morning to see it firming up again, I think is important because it was like the only thing yesterday in tech that really mattered that held in the Mag 7. So I like that point. We got the bell ringing right now. We're going to start pretty strong here with Bitcoin up more than 4%, just shy of 84K. We're up 3,300 bucks. BTC has been sluggish compared to some of the moments that stocks tried to bounce. So to see it rallying this morning, waking up, is very encouraging for bulls of all sorts, crypto and equity, and maybe the gold bugs too, which are getting another 0.5% on top of yesterday's breakout move in the precious metal. This morning we're trading at 3,000 for gold futures. Peter Schiff is having extra cream in his coffee this morning. What a move, gold doing exactly what it's supposed to over the last 2 weeks, completely sideways, while Bitcoin went down, while stocks went down. And now we see what happens if things go up. We're getting a little bit of life in here. Dollar down 20 bips right now. Bond futures down. Dollar was decent yesterday, but maybe it's just going to calm down a little bit. Let's see what happens with bonds, which brings us back to sentiment, Kevin Green. What do you think is a winning number, and what could potentially be a market-moving number? Or is this just about seeing maybe some of the political divide within expectations start to normalize maybe?
Yeah, so that's a very good question. So obviously you want to see the inflation, the one-year inflation expectations going lower than what we saw previously at that 4.3%. Now, that might be a little bit of a tall order. We have seen continued pressures to the upside when it comes to egg prices. But on the other side of that, gasoline prices have gone down over the last month. And that's usually what the consumer sees pretty much on a day-by-day or a week-by-week basis. That could change your sentiment. You did bring up a good point when you look at the political divide here, Oliver. And if I'm kind of looking at the data as a data analyst type of person here, you can actually look at the University of Michigan sentiment data website. They actually have a breakdown between Democrats and Republicans. What I'm going to be focusing on is what is the sentiment and the expectations just for the Republicans. Not saying that we don't care about what the Democrats are thinking right now, but this Republican sentiment is his base. So if that actually continues to deteriorate, that actually carries a little bit more weight than on the Democratic side, which may be influenced just by the person that's in office right now. So that's how I would probably digest that moving forward. We're at extreme levels to the downside when you're looking at the University of Michigan consumer sentiment data here. I think the expectations are for even a lower print than what we saw for last month. So anything that's even meeting expectations or exceeding, I think could be a net positive there. But you got to look under the hood. And I think if you just focus on the Republican side, that's going to give you, that true gauge that I think the market or the algorithms are really going to care about if they're trying to dissect this data.
Okay. Yeah, it does make it complicated. It probably, to Kevin's point this morning on net, does negatively affect its use case, I think. It makes it slightly less useful, but it also is, hey, a lot of that is going to translate into business owners. Like, look at the NFIB, right? There was a lot of political, it seemed, element there too, because it moved pretty quickly post-election, but then it came back in. So I think when you've got a few big round trips in the market, both for stocks back to their election level, dollar too, does it arguably get to a point here, KG, where we can say maybe some of this Trump 2.0, what people describe, because people on Twitter, they'll say this is because of Trump chaos. That's what they say. There's a lot, you know what I mean. People in the comments, there's a whole category that say, oh, as soon as they started talking tariffs, it went down. I think the market's priced it all in at this point, the Trump specific stuff. I mean, we round tripped so much.
Look, I'm going to take their side on that. Sure. We won't go down that road. Look, I think he is one of the main catalysts for volatility. And usually when we see pullbacks and you have a reason to sell something, those catalysts can actually, accelerate. And I think that's also another situation that actually did occur. We had stretch valuations. We did not have a new narrative. And then you also have the tariff talk. And I think the erratic nature of these tweets, you could make the case that Lufnick was actually like blindsided yesterday regarding these, the champagne tariffs and things of that nature. Once you kind of have that type of erratic behavior, it makes it very difficult for the market. Now, I do want to preface this consumer sentiment data that we are going to see does not fully include this whole pullback in the equity market.
Very true.
Right? The equity pullback started in the middle of February. And so it depends on that type of cutoff time. But the consumer sentiment could probably get worse as the market kind of goes down, right? You see that effect kind of deteriorating. And I think that's something to be mindful of.
So that might lessen its impact even more too, to your point. I mean, it might not be that useful of a number. It's a really good point if it hasn't, included the worst day of the stock sell-off and the worst week.
Yeah, exactly. And it's not on, not only just financial news, but every other news, headline out there talking about, correction territory and things of that nature. So we'll take a look at the data here. What I will say, though, kind of going into it,
I don't think it's going to move to the point. I don't think it's going to move to the point here to close the loop on the sentiment. I think that number's got to be a shocker, basically, to have some kind of influence on the market today. I think to your point about the stock element not being included, the political element probably normalizing, if that thing is neutral in any way, I think the market's just in a technical position that's going to drive the action, to your point on the charts.
Yeah, we'll see. I mean, the inflation expectation side is the one that's the wild card. Right, gasoline prices have gone down, but once again, I mean, if you see that creep up to 4.5%, that's a problem.
Yeah,
that's
market's not going
inflationary like print. So I think we're going to have to look at all different sides of that data set here. Now, going into this, what are we looking at over the last 3 days for volatility? For the most part, it has been kind of ratcheting down. It's been very tough to try to beat it to the downside here, but that is something to be mindful of. We have VIX expiration on Tuesday, not on Wednesday, on Tuesday of next week. So Monday is going to be the last day for the VIX expiration options that are expiring for the quarterlies there. So be mindful of that. So you are seeing kind of this rotation taking place right now. And one thing that I did have highlighted here, obviously it's just shifting for now, but going into the close yesterday, Oliver, we saw a situation where VIX or volatility was going lower and also equity markets were going lower. That's not a normal correlation. I would look for that to kind of recorrect itself, either equities moving higher or volatility kind of staying sticky where it's at right now. You could also see that same trend when it comes to VVIX. Vol is actually seeing a decent little deceleration to the downside here. So maybe we have the environment for a little bit of a relief bounce. You're seeing the skew on the tail ends. Joe Mazzola had a really nice post about this on X yesterday. The tail end skew on the 10% out of the money puts, 10% out of the money calls are starting to incrementally come to the downside there. That also then potentially means that maybe the amount of hedging activity or those premiums for hedging is starting to come down a tad bit as well. And you got to be careful if you're trading on the outsides, if you're trading out of the money calls or out of the money puts, you're not seeing the type of price movement or leverage like you saw last week. I'm seeing that myself. So that's something to also kind of be mindful of kind of going into this print here. All
right, nice, good. I like that. KG, the technicals on the S&P, if we come back to stocks broadly for a moment, as looking with a 1% bounce this morning, if you're trading and you're thinking, okay, is it 1%? Do I want to start entering a long position in the middle of a rally, or do I want to wait to see this thing fade? To me, it seems like the downside was steep enough this week that maybe whenever this bottom does get put in, you could have a steep move to the upside. So how much kind of snapback potential could there be in a single day? What do you think is achievable if people really want to buy today? How high could we get?
All right, so if we're talking about the first level that I would be focusing on, it's going to be 56.30. So that has been the area of resistance that we've seen pretty much all week, excluding Monday. So that's going to be a technical area of resistance. If you're kind of looking at what could we achieve,
all right, that's still today, a nice 30-point trade.
It is. And if you kind of break above that and you close, and you have successive closes above that on, let's say, the 30-minute or even the 15-minute, you actually break the downside when it comes to the shorter term time frame charts, the actual overall trend. So that gives you that first kind of signal that, hey, maybe we could see a little bit of a bounce here. For today, I don't know if we can actually get up to that 57.40 or if we can get up to the 200-day moving average. We'd have to have a hell of a print for University of Michigan to be able to do so, and then some really decent commentary. I just get a little bit cautious and say, look, we've been faded, people have been fading, pops before. You gotta continue to trade that way until you see a trend change. And the first trend change is 56.30 on that chart.
Okay, exactly what I was looking for. Thanks, KG. Good stuff. Looking at the levels, giving us some ideas. I think the bottom line is 1% is not too late for anyone trying to, buy a dip, even though it's a nice bounce to start. KG's point of resistance really doesn't start to kick into 56.30. It's a pretty nice trade from here. We'll see if they can push it.